But again, that's the thing is, guys, if you want, it's interesting the way our minds work, because when things are going really, really well, we see opportunity everywhere. There's no trade we wouldn't take. There's nothing that we can't make money on. And, we are constantly looking for a reason, constantly looking to put our money at risk, whether we have a reason to or not. Why? Because we've come off this long string of winners. And coming off the winners, really feeds that ego. It feeds that greed. And when you haven't tasted that pain in a little while, ego starts to set in. You start to think you're a little bit better trader than you really are. A little more competent than you really are. And when that happens, when the bad, what it does is it leads to the drawdown, because you start taking trades outside of your plan. You start acting in a manner that doesn't produce profit. You start doing things differently because things are going well. And then when we move into that drawdown, well, now all of a sudden everything we trade seems to go bust. And traders tend to handle that one of two ways. They either trade through it and continue to trade profitably, or continue to trade well through their drawdown consistently. They stop trading and walk away until they're in a better emotional state to trade. Or they do the third option, which is what most traders do, is they double down. They switch strategies. They just start throwing mud at the wall, hoping that something will stick. And so, I can tell from some of the questions that come in and some of the emails that I get, is that a lot of times folks are just looking for something to trade. The important thing to remember, traders, is that when there's nothing to trade, don't trade. When you don't see something that just jumps out at you and says, especially with the Fibonacci stuff, with the trend trader model, the T-squared model, it's very easy. It tells you exactly when to enter, when to not enter. When you get into the Fibonacci, when you get into the ratio pattern stuff, it's very, very important that you don't try and see something that isn't there because you want a trade. It's that time for dollars thing that I talk about. There is no such thing as time for dollars. There is no correlation between the hours spent trading and the amount of dollars that you will receive in compensation. Make sure that you write that down. There is no correlation between time and dollars. Trader who trades end of day at the end of a year, end of day trading at the end of the year, position trading type of trader, can make just as much money as a day trader. It all is centered around your ability to make good, rational decisions, disciplined decisions inside the market. And once you can do that with consistency, there is no limit to the amount of money that you can make in the market.